Could we have someone just shut that door, please? Thank you. Ladies and gentlemen, good afternoon and welcome to the post-lunch session. I guess it'll be a little bit of a challenge, but I'm happy to say that I've got a very eminent panel here, and I'm pretty certain they will keep you wide awake and interested in with what they have to say. At the outset, I would like to say that personally I'm really delighted to have the opportunity of being here in Washington. I've come from Karachi and my name is Zafar Khan. We've been privileged to work with the Wilson Center, and we look forward to continuing that relationship for our mutual benefit. Now, this session that we are going to conduct right now is going to be on the role of the private sector as it relates to Pakistan's energy requirements in the 21st century. We have three speakers. I think the modus operandi is now fairly clear. We are going to request each speaker to take about 20 minutes, and I'll follow that pink slip system that has been introduced in case somebody's really seriously overrunning his time. And then we will, as usual, have the question and answer session. And of course, I'd be happy to conclude the session with some closing remarks. So without further ado, I'm going to request the first speaker. The first speaker is the gentleman on my right, Mr. Asad Umar. He is the President and CEO of Agrochemical Pakistan Limited. It's a major Pakistani corporation and has also got interest now in the energy sector. So with that, Asad, please take the floor.
Thanks, Zafar. I'd like to start off by thanking Bob Hathaway, and I have to thank him for two things. First of all, I have to thank him for inviting me to come and speak here and be a part of this seminar. And I have to thank him even more for making me the first speaker after lunch. Hopefully that will mean that the inadequacies of my presentation will be largely missed out. Okay. Let me see if I can get this working. Okay. There was a question raised in the morning session today regarding the role of the private sector. What role is the private sector playing? And that's what I'll try and cover in my presentation. I'll kind of take you through each of the major subsectors of the energy scene in Pakistan and talk a little bit, show you what role the private sector is playing in that process, where it's coming from, and try and glimpse a little bit into the future, into where it is going. In doing that, I'll also try and highlight the opportunities that are there for the private sector, not only obviously of those belonging to Pakistan, but those who operate from outside Pakistan as well. As a starting point, just to summarize kind of the bottom line of my presentation, the private sector has a significant and perhaps more importantly, a growing role in Pakistan's energy market. The growing role has resulted as a result of a process of deregulation and privatization. This is a process which was started early in the 90s, so we are into that reform process about 15 years now. And that process has gradually broadened and widened in scope. And as a result, the participation of the private sector in response to that reform process has increased and widened. However, in my opinion, there's still substantive room for growth there, and I'll talk about that a little bit later. The participation of the private sector in Pakistan even today is not just limited to Pakistani companies. Some of the big names of the energy scene in the world, Shell, BP, International Power, BHP, are today involved in Pakistan. And when I go through each subsector, I'll comment a little bit on which companies are participating in which particular subsector. The next one is stated as an expectation. I should perhaps caution you by tempering this expectation and say this is more my hope rather than a very strong expectation, because the reform process, even though it has consistently moved in one direction, it has moved slowly, and it still even today continues to move slowly. However, we hope that the clear vision that we heard this morning will result in an acceleration of this reform process, and therefore, as that happens, the participation of the private sector will also increase substantially. Okay, I'll start off with the upstream, the oil and gas exploration and production sector. As we stand today, approximately 45% of the oil and gas production is done by the private sector. And primarily these are foreign companies. These are some of the companies, as I mentioned earlier, BP, BHP, etc. Shell is not a significant participant in the E&P part of the business. There are two public sector companies which dominate the scene and have more than just about half of the production share. However, both of these are slated for privatization. In my opinion, they are at the early stages of their privatization process. They have both been, in the last couple of years, listed. Small percentages of their equity have been placed on the stock market. And the bigger of the two, which is Oil and Gas Development Company, is actually in the process right now of doing a global depository receipt listing on the London Stock Exchange. So that they will get exposure to the international markets. They will then be faced by the demands of the international equity investor, and therefore will have to in turn engage in corporate governance reform as well as improvements in their technology deployment and business strategy becoming more consistent with international needs, which in turn hopefully will aid the development of oil and gas production in the country. In terms of the numbers, we already heard them earlier. Pakistan is basically a gas country. There's a little bit of oil, and that oil production has not increased substantially. The gas production has increased substantially. Just the one comment that I would have there, two areas which have not really been, we've not been able to exploit their potential fully. One is offshore. India has got significant production from the Bombay high fields, and it is the same strata which travels down to where Pakistan is and the offshore of Karachi, and that's not been fully exploited. The attempts have just started. There was an attempt last year. There was no find. However, the geologists tell us that the results were encouraging. What they found was promising, and therefore there's more work which is going to get done there. The second one is the area of Balochistan. We didn't talk about it this morning. That everybody agrees the highest potential gas reserves in particular in Pakistan today are in Balochistan. And because of the political situation there, the security situation there, essentially it's off limits to any significant attempts. If we move on to Pakistan's oil refining sector, we had 3 refineries in the country in the mid-60s, and then for the next 30 years or so, absolutely nothing happened. And that impasse was finally broken by a public sector organization. It's actually a joint venture between the UAE and Pakistan. And a new refinery was set up, about 100,000 barrels a day. And since then, a smaller private sector investment has also come in. There are a number of initiatives being looked at right now. I don't know if there's somebody from IFC here. There's somebody who's an ex-IFC person is actively looking at a project in Pakistan. And the project that the advisor mentioned this morning, a coastal refinery with Kuwait being a participant, it's not yet clear to me, at least from the announcements, whether that's going to be done in the private sector or the public sector. My hope would be that it's going to be in the private sector. But as we stand right now, 65% of the refining capacity is in the private sector. Oil marketing, almost 15 million tons of oil products marketed in the country. The share of the private sector is 40%. 60% of the share is with a single public sector entity, which is PSO. PSO is also slated for privatization, and as opposed to the comment that I made about the E&P companies earlier, PSO is actually in a fairly advanced stage of privatization. In fact, it's so advanced that I don't know why it's not happening. It's really everything is ready. If you look at the sectoral mix within oil marketing, you'll see that there is a greater market share of the private sector in what we call the white oil products. The public sector is dominant in the fuel oil, and it's partly, though not totally, a result of the impact of the IPPs, which were fuel oil based, where government guarantees were involved. Recently, we have seen a spate of new private sector participants come into this. It's a very welcome development. There are now 7 companies operating. Shell is a major player. It's got the second highest market share. Caltex, which is a Chevron subsidiary, also has a significant market share. But as I mentioned, a number of new private sector companies have started coming into this field as a result of the policy which was developed a year or so back. So this is going to become a very, very competitive and an increasingly private sector-led segment of the oil business. And once PSO is privatized, 100% of the business will be in private sector hands. Oil handling, storage, and transmission, and this is in addition to what the oil marketing companies themselves own as independent. There are really 3 projects worth mentioning. One is a fuel oil import terminal, which is in the hands of the private sector. It has a capacity of importing 9 million tons per annum. It was built in the days when a lot of fuel oil was being imported into the country because of the IPPs, which are fuel oil based. Since then, we have made a significant transition towards gas as the fuel of choice, and as a result, it's underutilized, but it's a significant facility which is there. Then there are 2 major oil transmission pipelines. One of them is a public-private joint venture, and one of them is in the public sector. And this pipeline, the public sector participation in this area is through the Parco company, which is the refinery that I mentioned earlier. At this point in time, we've not heard any programs for privatization of Parco. Therefore, the participation of the public sector in the storage and the transmission sector, as well as the refining sector, at this point in time looks set to be continuing. Gas transmission and distribution. Mr. Mukhtar Ahmed was running one of these 2 big companies, public sector utilities, a very well-developed network, a very extensive network, 77,000 kilometers. They handle right now approximately 3.7 billion cubic feet of gas a day and serve 4.3 million consumers. There are only 2 companies in here. The country is divided on geographical basis, and it's 100% of the network is managed by these 2 companies. However, they are also up for privatization. There was a debate till fairly recently. The model that was, I'll share that model in a bit more detail. What has happened on the electricity side is what we were expecting would happen on the gas transmission side, but it seems like the government has decided not to go through that process, perhaps because it would have taken a very long time, and it seems that the companies as they stand today will be privatized. The privatization process in here is neither at a very early stage nor at a very advanced stage, so perhaps somewhere in the next 12 to 24 months you might see the privatization, and obviously once that happens, then 100% of the gas transmission and distribution business in the country will also be in the private sector hands. A new element is, as was mentioned by the advisor in his morning presentation, is on LNG import. The policy as it has been enunciated by the government has defined the role for the import part of it entirely to be in the private sector. The expressions of interest have been invited in it for that project, and without going into detail, there are 2 different models which have been allowed to be followed, but the important point in the context of the presentation right now is that all of it is supposed to be done by the private sector. The offtake at this point in time is primarily going to be, although there is nothing in the policy which restricts you to that, but at this point in time the offtake will be through the southern public utility, so therefore will go into the public sector. Okay, sector, this is the power generation and distribution business of the country. What I have tried to do for you is the boxes in red here is what is in the public sector. The boxes in the blue is what's in the private sector, and then obviously the ultimate consumers. If you go back, say about 15 years or so, 100% all of these boxes would have been in the red. Essentially two companies, Wabda, which serves all of Pakistan except Karachi, and the Karachi Electric Supply Company. Both of them integrated utilities. The way things stand right now is that Wabda is being unbundled, as they call it, and it's being unbundled into 4 generation companies, and it's going to have, or it has 9 distribution companies, or I guess people in Pakistan did not think that an acronym DISCO was appropriate for a company in Pakistan, so the name has been changed to Electric Supply Companies now. Anyway, the hydel capacity, the total power generation capacity is about 90,000 megawatts. Of that, 25% is storage-based hydel capacity, and 8% is run-of-the-river hydel capacity. So 1/3 of the total power generation is hydel. Nuclear contributes only 2% of the mix. And if there is a message that needs to be underscored in Washington, it's that this is a box that the US policy has to seriously take into consideration when looking at Pakistan's energy needs. The way the structure has been done is the generation companies, as a first step, the bulk purchaser of power has been segregated out of Wabda and is called the National Transmission Distribution Company, NTDC. The generation units sell their powers to NTDC. The NTDC in turn then sells it to the electric supply companies. There are 16 private sector thermal plants. 30% of the total capacity of the country is in these private sector plants. I should mention what I have not covered in here are what we call the captive power plants. That's the power generation capacity which has been set up by the industrial units themselves for their self-consumption. And that is somewhere between 1,000 to 2,000 megawatts. So about 10% of the total power generation capacities are captive units themselves. So that's the way the thing is. Okay, the next box is the Karachi Electric Supply Company. It's an integrated private utility, and it has just recently been privatized, and this has been perhaps at least one of the 2 most significant privatizations achieved by the country so far. So great success in getting this privatized. Where are we going towards? The way it's the policy pans out right now is...
Just one minute. Is HUBCO a part of KESC?
HUBCO is the IPPG. It's in the blue box on top of KESC. The way the strategy seems to be unfolding right now is that the hydel storage-based projects will stay with Wabda because there's significant political issues associated with those. However, the young kid who did this presentation for me has gotten kind of cute, and he's done the next hydel run of the river in 2 shades. And what that says is that you will see run-of-the-river projects both in the public sector and the private sector. The larger ones are probably going to be in the public sector, and the smaller ones going to get done in the private sector. Nuclear power generation, as it stands right now, is expected to stay in the public sector, and frankly, I don't see why. I think this is an area in which you can clearly invite private sector participation. As we saw the numbers this morning, it's competitive in the long run, and this is an area that we should consider inviting the private sector, and that would mean inviting the private sector essentially from outside the country. The thermal generation units, the 4 units that are currently in Wabda, are all slated for privatization. So all of that will, so all of the thermal power generation in the country in the future will be done by the private sector. The NTDC is shown here as continuing to be in the public sector. However, there is a second phase of deregulation when the NTDC will become only one of your option as to who to sell power. Otherwise, you will be free. It will be a deregulated market, and you can choose your consumers, and you can get into direct negotiations. So therefore, while this box at this point is considered to be red, but effectively the distribution part is also going to get privatized. The distribution companies are all slated for privatization. So all thermal power generation, all of electricity distribution will be in the private sector, and essentially the hydro storage-based power projects and nuclear power will stay in the government hands. Okay, in terms of opportunities, the areas, some of these I already touched upon, but I'll spend a little bit more time on it, and I'm sorry I might be repeating some of the things that were said this morning. Offshore basin remains largely unexplored. I already talked about this. This is an area of opportunity. LNG import and terminal facility, we talked about that. This is clearly an area of great opportunity. And frankly, an area of critical importance, because what's happened is that the Pakistani energy planners have effectively arrived at the scene 2 to 3 years too late. And we are really struggling to find the LNG molecules. We would have had substantively better deals and much easier access to these molecules if we had come in even 2 years earlier. So this is a challenge right now, and therefore an opportunity for the private sector. Coastal refinery already talked about, so that's another area of responsibility. And just a quick comment there, for more than 20 years, refining was a part of the chain, which was the dog business. This just never made money, and as a result, no investment went in, and globally there is a shortage right now. And there is an opportunity right now for new areas of refining to emerge as regional centers, and therefore potentially an area to look at in terms of ambitions which go beyond the boundaries of the national geography, kind of the approach that Mr. Shahid Javed Burki was talking about this morning. Run-of-the-river hydel power plants, I talked about this morning. There's nothing in the policy which stops you from the larger projects also. But there are obviously greater commercial and political risks associated with that, although the political risks are substantially smaller in nature compared to the storage-based projects. But the small projects, a lot of private sector interest is already being generated, and people are starting to come in. Coal-fired power plant. This is just a massive opportunity. In terms of the question which was asked this morning, who are the guys who are the best at this in the world? The Germans are very, very advanced at this, and the South Africans are another people. Because of their isolation, they were forced to develop the technologies. They are probably the two leaders in the world in terms of using lignite. In terms of technology, the reason, apart from government policy, and there is still a policy impediment to this, which I'll just mention, there was a technology reason why this lignite reserves in Thar were not being developed in Pakistan. It was in a location which did not have any water at all, literally no water. There is not even drinking water in that area. And power generation requires significant amounts of water. However, the technology improvement that has happened recently is that you're able to, just let me point out, the biggest weakness of that coal is that it's very high moisture. Got a very high moisture content. Almost 50% of the content is moisture, and therefore the heating value is low. The new technology allows you to extract that moisture out of the coal, so the quality of the coal improves and the heating value goes up, and you create substantial surplus water, which can then be used for power generation. So technology issue stands resolved today. What is the policy issue which is in the way? It is the unrealistic expectations of the government of Pakistan in terms of the tariff which will bring this investment forward. And I think the mistake that we are making in this is that we keep on putting all our eggs in one basket in terms of our energy policy. You've got to run an energy policy as a portfolio. The kind of approach that we heard this morning, that's the way we need to look at it. If you look at gas at $3 a million BTU, a coal-fired power plant does not make any sense. If you look at gas at $6 a million BTU, it makes eminent sense. Will gas be $3 or will it be $6? If I knew the answer to this question, I'd probably not be at this conference, as much as I like Mr. Hathaway. And I don't think anybody does. And not even nations know the answer to such questions. And therefore, you've got to take a portfolio approach. What's happening right now is we're trying to develop this the project through the Chinese, essentially therefore by conceding, and this is happening government to government contacts and the Prime Minister requesting special tariffs and so on and so forth. My worst nightmare is that project actually goes through. Because once that project goes through, it will set the benchmark for what a bureaucrat will be willing to do. And at that non-commercial tariff, no commercial investor is going to come in and invest. So that's the policy decision that is faced. In terms of size, it's just awesome, as we talked about. It's not just one of the biggest coal reserves in the world, it's one of the biggest energy reserves in the world. 57 billion tons of oil equivalent versus the 300 million tons of oil that we have. Privatization, I won't go through this list again, already talked about it. Mr. Mukhtar also mentioned this. Final slide, and I'll end on this. The challenges, and let me explain what I mean by these challenges. These are the things which, in my opinion, are roadblocks between the private sector playing an even bigger role compared to what it is doing right now. And I will mention that, let me take the opportunity, the question was asked this morning, the ability to play a bigger role is significant. In terms of Mr. Burki's question of finding the financing, it's amazing how much interest there is today in Pakistan from the overseas investor, in particular from the Middle East investor. I am literally chased by people from the Middle East wanting to put money into Pakistan and asking us to do joint ventures. And my question is, in what? And they say, we don't care. Literally, that's the level of interest. We don't care. You're a good company. We have confidence in you. You'll make good use of money. And it's not just the Middle Eastern guys. Merrill Lynch, Goldman Sachs, they're all approaching us, asking us to do GDRs and whatnot. So if the right economic opportunities were there, as has been demonstrated through the telecom example, the right set of policy decisions, deregulated sector, and look at the investment that's coming in. First one I mentioned earlier, access to high potential areas in Balochistan. Private sector is just simply not going to go in until we find a political solution to it. And I would hazard to forecast that even if we found a purely security solution to the problem, the private sector will still not go in because of the vulnerability that could see a reversal. There has to be a sustainable political solution to the Balochistan situation for significant investment to go in. The slow rate of deregulation and privatization, I said the policy is moving in the right direction, but it's still very, very slow. The unbundling of WABDA has taken years and years and years, and pragmatically speaking, it's still nowhere near complete. We are a shortlisted company, one of the three as a bidder for one of the privatization transactions. So we're directly involved with the process and how it's going, and I can tell you it's moving at a snail's pace and needs to be speeded up. The politics of storage-based hydel power generation has already been discussed in the morning. I won't talk more about it. Specifically in the area of power generation, the seeming overlap of two institutions which have been created for this purpose. One is the Private Power Investment Board, which was supposedly set up as a one-window operation to bring in the private investor. And the second one is the Electrical Power Regulatory Authority. And there has been an ongoing conflict. I frankly have empathy with both of those institutions. If you meet those people, they're well-meaning people. They're both trying to execute the mandate as they read it. And I think there is a need for some external intervention there. Perhaps the government, maybe it's World Bank can assist with some kind of a regulatory reform process there. But clearly, there needs to be clearer lines drawn between PPIB and NEPRA. Otherwise, there's been a lot of frustration faced by the potential private sector investors in this area. I didn't even get a shocking pink slip, so I've done well. Thanks.
Thank you. I was watching very intently. Since I didn't see anyone dozing off, I decided not to issue the pink slip. So thank you, Asad, for a very fine presentation, and I'm sure we'll pick up some questions later. Let's go to our second speaker, and I have the privilege of requesting Mr. John Hammond of the United States Energy Association to be the second speaker.
Okay, I'm going to find my presentation. I'll be right with you. Oops. Thank you, Mr. Khan, very much. Thank you, Bob, for the invitation to come here. Thank you, Bhumika, for harassing me to get my presentation and written text to you in a timely fashion. So they're both in. I think I'm off the hook for those things. We had a pleasure of meeting briefly with Hilal Raza, who's a friend for many years, and energy advisor Mukhtar yesterday for a few minutes. So it helped put this presentation in perspective. and gave me some perspective to bring to you. The U.S. Energy Association, we're located on the 5th floor of the same building up in the front. We sometimes get Woodrow Wilson visitors coming into our offices looking for Bob, and so we send them through the labyrinth to this location. We are an association that's been around for a long time, composed of energy associations, trade associations, the major ones in the United States, and also a lot of companies. We have about 160 members, and we're a member of the World Energy Council located in London. Hilal Raza is the secretary of the Pakistan World Energy Council Committee also, and we serve a similar function, which is international cooperation and discussion on energy policy and energy technologies around the world. In preparing for this, I took the liberty of contacting some of our own members, major players in the U.S. and international energy market, to sort of ask them what their take is on Pakistan as a location for investment. So some of my remarks will be punctuated with vignettes taken from those conversations over the past week. As you know, there's historically been a very strong role of U.S. investment in Pakistan. This is taken from Mr. Bashar's presentation from the Board of Investment of Pakistan. This is over a 16-year period, and you can see the U.S. was almost 40% of international investment. However, that is changing, and there was a lot of investment that went in the 1990s, particularly in the power sector. This is a more recent picture, and it's really the left-hand column that I want you to look at. And as you can see, as Asar said before, the Middle Eastern investment is sweeping aside the U.S. investment in terms of quantity. We're now at about 26%. And the UAE, as you can see from here, has actually, just as one country, has surpassed our investment. Now, these are in all infrastructure sectors, but it's dominated by the energy sector. Back in 1995, there was the international IPP boom. The U.S. industry, as you know, at that time was flush with money, and our market was flat in the late 80s and 90s. And so people began to look overseas in a major way to take the U.S. independent power model, the private sector model overseas. And these companies were active, and there were others from the U.S. that were active in Pakistan. They were pursuing projects, putting money into projects, investing. Some actually proceeded with projects. Some lost a lot of money, and many of them lost their name and actually their existence over time. As you can see, as you look through them, some of them don't exist, and some have been merged into other companies. It's been a major change in what's happened here in the U.S. energy sector, particularly as regards to its interest and appetite for overseas investment, and that's what I'm going to try to address today. Not Pakistan, but the U.S. Why has the situation changed? We now have we're running into shortages of power and shortages of oil, gas, LNG. As you know from reading newspapers, we need lower priced energy. We need more energy to sustain our GDP growth here. So there's a tremendous amount of competition. And I'm talking about suppliers of equipment, developers, financiers. The U.S. has a strong market, and you're competing against that market, unlike you were about 10 years ago. There's been major restructuring in the U.S. energy industry, and there's increased international political and security concerns that have arisen in the last 4 or 5 years that have dramatically impacted the appetite for some of the conservative energy companies, and many of them are very conservative, for foreign investments. Now, this is what you're competing against in the U.S. This $3.5 trillion demand for investment here, just domestically in the U.S., and you can see how dominant the electricity sector is, but also gas and oil. So you see a lot of people looking internally in their business plans at where do we go, and they're saying, well, we're building coal plants. There weren't any coal plants, and none had been built in quite a while, but now there are probably plans for 20 or 30 large 600 megawatt and larger coal plants in the United States. We have the coal resources to support that. A lot of U.S. companies, a lot of our engineering firms have like 4 years worth of contracts just in the coal area. nuclear power plant revival is taking place. There are proposals shortly. They're talking about not only renovating and retooling existing plants, but beginning to consider building new plants in the U.S., something we have not done for a very long period of time. There's a substantial interest and a belief in our industry and those who supply equipment that this can take place. And we also have restructured in that we now have companies that specialize primarily in nuclear power generation. They have bought other assets from other companies, so they are experts, and they are not in coal, they're not into other resources, they're into nuclear, and these are private companies. The transmission investments from, as you know, from our blackouts and recent actions by U.S. Congress, we are woefully underinvested in transmissions. It's been very difficult to invest in. That backlog is beginning to break apart, and we're seeing a lot of people looking at transmission investments here. Gas distribution, and also this, including this LNG terminals and such. We're a major user. We don't have enough resources. We can't develop it. We're looking for it all over the world to bring it in to the United States to support our economic growth. And again, the oil investments, and it's huge. I mean, our major companies, oil companies, they're looking all over the world, but they're looking in those places that have large and significant oil resources because of the U.S. domestic demand, which is their primary market. This is an example of what people are looking, if you're interested in U.S. companies doing LNG terminals in Pakistan, that's what they're looking at in the United States. So over 45 proposals. We anticipate that 5 to 7 of these may actually be built. Huge investments, huge hurdles that take place. But you can see this is where our sort of oil, gas industry is focusing, and supported by a lot of the gas suppliers. They're looking at these locations and people to invest in these plants throughout the United States. Coal mining, a revival in coal because of the price of electricity. If you live in the Washington area, follow what's happening around the United States. Prices on electricity have gone up dramatically and will continue to go up, even though we have restructuring in market prices. There have been shortages of investment, and the prices have gone up. So looking at this is about $30 to $45 billion over the next 30 years just in coal mining to support the existing and future coal plants to be built. And these are investments primarily in the U.S. and also in Canada. In Canada, we're looking at huge investments in the oil sands, which will be done by a lot of U.S. companies, and even the Chinese are looking into that market as an alternative for liquid fuels. But there's a substantial revival of the coal mining interests, but focused primarily in the U.S., where we have large reserves. Also, in 2002, we passed the Energy Policy Act, which dealt with all of these areas: transmission, electricity generation, regulation, oil and gas incentives, LNG terminals and such. And they put a lot of incentives into this bill that are just now being finalized in regulations, and companies are finally saying, okay, what does it really mean? How much of an incentive is it for me to invest? And these incentives are particularly significant. This is just a brief breakdown of some of the areas where companies in the U.S. are getting tax incentives as well as R&D investment incentives, joint venture with the U.S. government incentives to look back into the U.S. market. Changes in the U.S. industry. We have gone through a lot of mergers and acquisitions. There's a tremendous number, and we'll be going through a number more because this has been opened up additionally by the Energy Policy Act of 2005. We were talking about Unical the other day. Where is Unical? Well, Unical is owned by Chevron now. There are only a few major oil and gas companies. Fortunately, they're all members of the U.S. Energy Association. But we have a hard time keeping our membership at 160 because they keep merging, and then they only send in one application form for membership. And this is the same problem the Edison Electric Institute and the American Petroleum Institute have as well. And what this means sometimes, when these take place, people just, there's a slowdown in investment activity because there's so much energy is going into merger and acquisition and restructuring, downsizing, shifting corporate offices, and the trauma that goes with that. So a lot of these, so when they get it, like Duke Energy has just merged with another company, everything is stopped in terms of, you go to them and say, are you interested in this or that? They say, no, we are merging. We've got to go through 5 regulatory commissions, plus the Federal Regulatory Commission, and we may need special legislation. For 2 years, don't come and see us. Don't bother us. The unbundling of has helped the U.S. energy market. This is in the power sector particularly, but it's also taken a lot of big players out of international investments. As you recall, back in the 90s, the players that were coming into Pakistan, India, and a variety of other places, some of them were independent IPPs, but a lot of them were integrated utilities that had their own subsidiaries, and they were able to fund that through excess resources that they had. Well, those have all been spun off, so those IPPs have been pushed out on their own and don't have the resources that were there before. Now, the third one has been very dramatic, had a dramatic impact on our industry and our membership. That's the failures by energy companies in the domestic market and a failure of many of their international ventures. We all know about the situation with Enron, but the fallout from that was dramatic, and it caused the Wall Street and the banking community call in a demand from the other IPPs, who generally are highly leveraged by borrowing money and have a small amount of equity. It's a good business model, but the Wall Street said, no, we want to see cash on your balance sheet. We don't want to see what happened to Enron happen to you. So those people simply stopped dead in the water. And some of them, a large number, Calpine's the most recent one, just went into bankruptcy. A lot went into bankruptcy. And that immediately stopped their international efforts. AES, which is active in Pakistan, nearly missed it. As we discussed yesterday, their stock fell from $45 a share down to about $7. And they had to change, they ousted their CEO and the chairman and changed their structure. They're still active. Southern Company had a subsidiary, Southern Electric International, was very active internationally. Edison Electric had Mission, and then it became Edison International. Most of the assets of these companies overseas, a lot of them have been sold off. People got out of the business and lost a lot of money in the process. They went aggressively in the 1990s into international ventures, and they found that the markets did not respond. They were not like U.S. markets. Prices that were set in contracts were renegotiated out from underneath them and their investors, and that many people simply walked away from projects or sold projects very cheaply. And it reduced their incentive to start new projects. In the U.S., because of this trauma that happened in the power industry and the utility industry, and there's been a return to the core business. In other words, if we sell electricity, we sell electricity to people in Washington, D.C. Don't come and talk to us about selling electricity in the UK. It's too risky. We lost money in the UK. Don't come to us and tell us about investing in Germany. We lost money in Germany. So the conservative side of our business began to win at the board meetings. And so new ideas, they said, we do not want to bring up a proposal for an international venture at this time because our stock will plummet. That hits the Wall Street Journal. That, fortunately, is a bit behind us. The utilities themselves are reviving, and that fear is lessened, but it is still there, and there are a lot of CEOs who still sit in the decision chair who are saying, I saw that proposal 10 years ago, not till I leave this post will the company get back into this business. And that leads to the last item here, the increased risk aversion. U.S. companies simply just got scared to death. They were not used to dealing, unlike the oil companies, who are used to dealing with international risk, international negotiation, international law, the varieties of different laws and different customs overseas. Our energy, power companies, related companies were not. So they saw the business model as the same as the U.S. You sign a contract, you proceed, whatever is in the contract proceeds. Naval sent a severe shock through that community, but their projects in Indonesia, Pakistan, Argentina, Brazil, Germany, UK, that all had the similar problems. As soon as you started to make money, the government came in and said, no, you shouldn't do that, and we're going to change the terms of the agreements. Just an overview, and you saw more opportunities, and you'll hear more of that from others. But in terms of U.S. interest and our members' interest in like oil and gas, it's very limited because again, our majors are looking at where they can extract oil for export to the United States, where their market is. So they are not as interested as other companies are in oil and gas opportunities for the domestic market where they draw that oil or gas. There is some interest in pipelines, but again, it's limited now the number of companies that would engage in international pipeline ventures. LNG terminals, there is interest, but it's more in construction and selling the equipment. In electricity, there's still a lot of interest, but I'll go to the second bullet here. A lot of the interest in U.S. companies is in sales of services, goods and services, versus investments. And so they're happy to sell equipment and service equipment. They're not as happy to take 10% equity in a project. It's just a fact of life, unfortunate fact of life at this time. One thing I've noticed in talking to the companies I talk to is that there's a lack of knowledge of what's happened in Pakistan, who's in charge, what's taking place. One company I talked to just came out of bankruptcy about 3 months ago. The person who's in charge of international business development is gone. There's a new person there. When I said Pakistan, they said, well, we don't really know anything about Pakistan. Is that me? No? Okay. We don't know. They did express interest in knowing more. What is going on in Pakistan? I talked to one of the top 5 major engineering companies, which is one of our members. They said, we have 15 countries. Well, first they said, the next 4 years, we have enough work on coal-fired power plants and ethanol plants in the U.S. to keep us busy, and we're hiring engineers, and we'll take it from India and Pakistan if we can get them. But we're looking now back at the international market from which they withdrew, and they had done work in Pakistan. And so they had recently had a corporate meeting, and they did a ranking. And they have 15 countries that they are open to sort of looking at. If Pakistan is not on the list, simply because probably nobody in that company is still around who did projects in Pakistan and is aware of what's going on in Pakistan. So I think this conference and the potential investor conference that the energy advisors have been talking about and the embassies have been talking about is a very timely first step to get people back up to speed of what is taking place and what the opportunities are, how things have changed in Pakistan. And there's very little knowledge of your new regulatory structures. We actually have a partnership with NEPRA, your regulator, and in July, Lieutenant General Zafar and another member and three other members of NEPRA will be here. We're helping them to understand the role of a regulator, and they'll be meeting with the Massachusetts and Kansas regulatory commissions, and hopefully it'll accelerate the project that you are going to have up for review, because your regulators and our regulators look at independent power projects in their impact on price. But they have a certain role, and it's not a comprehensive role, and regulators need to know exactly what they can regulate and what they shouldn't regulate, unless they want to dominate the market and make it basically a public sector market again. So we're involved in that educational process. We also have the chairman of LESCO and a member of NEPRA in South Africa today. They're under a program we run with the USAID South Asia Initiative for Energy. They're meeting with the Southern Africa Power Pool and ESCOM to talk about how energy trading takes place within that region, and is it applicable to South Asia. And they're also looking at the ESCOM energy market as to how you can put energy into a transmission system and open it up for various private and public buyers, and not have the transmission system play any role other than being a party that distributes based on contracts. The financing difficulties due to political and financial risk. Fundamentally, there's lots of money out there for chasing energy projects. There's plenty of money to do all those projects that I listed in the U.S., around the world. They're great investments, and as you mentioned, that Wall Street's looking at, there are funds for Pakistan, funds for India. Thank you. I did get one. Thank you. Recommendations. And this is my next to last slide, or near the end. Look to U.S. firms that are operating in Pakistan right now. You've got Tenaska, you've got AES. They're doing projects, big power projects. Build on those relationships, because the other companies are looking for a new track record. They want to see, in fact, this came from one of our Fortune 500 companies. They're looking for a show me element. Show me that Pakistan will do a project, a private sector, large-scale project, will not renegotiate the contract, and not tie it up in regulatory or state interference. Except contracting versus full private ownership or privatization, contracting from U.S. companies. They'd be happy to contract to run your refinery, to run your power plant, and whatever, and joint ventures on the contracting side because it limits their liability, but it gets their foot in the door. This is what AES does. They're a contractor, operator, they're not owner. But now they're considering possibly getting further involved. This is an opportunity I would really encourage to look at this. Bolstering best commercial practices in your existing state-run entities, and I think you're in the process of doing this. That is, make these state-run companies work in a commercial atmosphere and then privatize them if you can. Reducing political and security risks in Baluchistan and elsewhere. This is mentions the energy partnership program that we have. We have with NEPRA. We have over 80 partnerships around the world with utilities, where we bring them to the U.S. and we take people overseas, and we're hoping to develop something like this in Pakistan, and I can talk about that individually later. So I'll stop at this point, and that's our contact information. Thank you very much.
Thank you, John. Our third and last speaker for this panel is Mr. Zamgochian. You have the floor, sir. He is representing the U.S. Chamber of Commerce.
Thank you, Mr. Khan, and thank you, Bob, and Bhumika seems to have disappeared. I'll thank her, too, for helping me get my materials in on time. And Bob, thank you for inviting me and allowing me to present on behalf of the Chamber here today. I'm going to give a general and broad overview of what the investment climate is from the perspective of U.S. Chamber of Commerce members based on some criteria that we have, 8 to be exact. But before we get to the 8 criteria, since we're all about numbers today, we took that from our 12 criteria for overall international investment. And the areas that we cover based on what our members are interested in before they break into a foreign market include the size of the internal market, and we all know the population of Pakistan, its purchasing power parity, and the population below the poverty line, and so forth. The freedom of access to market. And in Pakistan's case, very recently, within the past 5 or 6 years, has done a turnaround, and they adamantly seek foreign investment, and they've undergone significant economic reforms to facilitate a broader foreign business presence in Pakistan. Labor force and raw materials. We had the Secretary of the Board of Investment at the Chamber not too long ago, and he had a very interesting catch line that he started with. It's not just India that's shining, and we at the Chamber would have to agree. Overall, they have a population of roughly 166 million. The literacy rate in adult males has gone up significantly. It still remains relatively low for women, but unemployment has gone down, and it's pretty stable at around 6.6%, and you have a very qualified workforce in urban centers. We look at protection from currency devaluation. Pakistani rupee has remained pretty stable at roughly around 59 to the US dollar in the first 8 months of this year, but it's expected to weaken slightly against both the US dollar and the euro for the remainder of 2006, but this stems largely from a widening current account deficit and international oil prices. We examined regulatory burdens. Overall, government approval is not required in setting up an industry in any field, place, and size, except for certain industries such as arms and ammunition, explosives, radioactive substances, and security printing, just currencies and mints, but I don't think we have any bomb makers in the room today. We examined the favorable taxation and tax incentive programs that Pakistan has, and again, compared to the region, Pakistan is shining. Pakistan has granted significant tax and duty incentives to 3 categories of industries, and these are the priority industries, and they include tourism, housing, engineering, chemicals, and construction. Value-added export industries, which include manufacturing categories such as garments, linens, surgical instruments, sporting goods, and high-tech and information technology industries, chip manufacturing, software development, and precision equipment manufacturing. Usually industries you'd associate with the Indian market, but they are in Pakistan as well. Unfortunately, we also examine political risk. If you watch CNN or BBC or Fox News daily, then you don't get a pretty picture of Pakistan. And to be fair, there are significant threats to certain interests in Pakistan, both from Al-Qaeda and remnants of the Taliban. There have been 2 assassination attempts against President Musharraf and a similar attempt against Prime Minister Aziz. However, the Pakistani government has not taken this standing down. They've taken significant steps to curb the terrorist threat, including banning 8 extremist organizations, and they have added extra police protection on all diplomatic missions, hotels, and certain industrial sites and commercial locations. We look at overall predictable macroeconomic management. It's no secret, unless of course that you're watching some of the cable news outlets, that Pakistan's economic performance was spectacular in 2005 as well as 2006. Achieved the highest growth rate in the last 2 decades during that period of time. Their sound macroeconomic performance reflects increasing private investment and expanding development expenditures. And we expect that to sustain further economic growth and development throughout 2006 and 2007. It should be noted that despite the devastating earthquake, Pakistan's economic growth overall was little impacted. The growing potential of signing a bilateral investment treaty with the United States, the U.S. Chamber of Commerce predicts should lead to hopefully more significant future investment in Pakistan. Getting close to the end of the 12 criteria here. But we have to look at remittance of dividends here. And again, Pakistan is on the fairly liberal side when you compare it to the rest of the region. India, Bangladesh, Sri Lanka, Nepal. Their liberal foreign exchange regime places few restrictions on holding and transferring foreign exchange, and there are no limits on the remittances of profits, dividends, debt services, capital gains, or returns on any intellectual property or payments for imported inputs. We look at property rights protection, and going all the way back to the 1979 Industrial Property Order, industry overall is safeguarded in Pakistan against most compulsory acquisitions by the government without sufficient compensation, and that again is market driven. In terms of the export potential of Pakistan, the principal sectors that are attracting FDI today are financial services, oil and gas exploration, trade, transport and storage, and communications, chemicals, pharmaceuticals, and fertilizers, and we hope power as well going forward. And finally, we look at reliable infrastructure support, which is key to any company that's going to break ground in an emerging or somewhat risky market like Pakistan. 54% of the government's planned development expenditures are allocated to infrastructure development, and that's the good news. Network capacities for satellite traffic are increasing yearly. However, services are still unavailable to the majority of the rural population. Now let's look at the 8 criteria that are important to investors looking to break into energy and power. And they are, what are the available resources? What is the infrastructure? What is the export potential? Freedom of access to the market, energy and power policies, production by source, consumption, and general environmental conditions. So let's start with some of the available resources. Coal. We've heard a lot about coal today, and it's little secret that they have enormous economic potential. The country's coal production as far back as 2001 was 3.5 million short tons, and ongoing detailed assessments estimate the recoverable coal reserves to stand at 3 billion tons, representing about 89% of Pakistan's total recoverable reserves. If you look at oil, the production in 2003 was about 106,000 barrels of oil per day. Proven oil reserves overall, though, are about 348 million, and that's a 2005 estimate. If we look at natural gas, the proven gas reserves, as the first presenter noted, are roughly 43 TCF, trillion cubic feet, with yearly production reaching about 992.5 billion cubic feet. And the largest natural gas fields are in Sui at 650 million cubic feet per day. Nuclear power. And I'll have to share the sentiment of esteemed presenter here. This is an area that really needs to be examined by the U.S. further. Nuclear power accounts for roughly 2 to 3% of Pakistan's power, and it's a small contribution to the total energy production and requirements of the country. And renewable energy. Although Pakistan faces substantial challenges to meet its present energy demand through many of the traditional sources with primary supplies, renewable energy is a valid option, and I'm glad that Bikash Pandey from Nepal, and now an honorary Pakistani himself, had the opportunity to speak on that this morning. So let's look a little bit at the infrastructure. Well, in 1994, Pakistan opened up to the energy sector, if you will, to private investment, and there were significant investments were not made in transmission and distribution in parallel with the investment made to increase generation. As a result of this, the infrastructure remained largely underdeveloped, with power generated by power plants unable to be properly dispatched, and that led to, again, limited access. The poor power quality infrastructure is the cause of an estimated 30% loss of transmission per year, which is roughly even with the rest of the region, but lower than, say, Bangladesh. If we look at the export potential of Pakistan, in fiscal year 2004-2005, exports reached about 14.85 billion, and that's an improvement. It's a 7% improvement over 2002-2003, and this is largely attributed to the consistent government policies and incentives to exporters. These are some of the pipelines that are currently being discussed. The Iran-India via Pakistan pipeline has been well reported, but a more interesting option is a gas pipeline from Turkmenistan via Afghanistan. If we look at freedom of access to the market, until 1999, the government tightly controlled the oil and gas industries of Pakistan, and no decision could be made without referring to higher authorities, if you will. And when they were made, they were often arbitrary and political rather than market-driven. However, we can safely say that since early 2000, an ambitious pro-market reform program has been underway with some bumps in the road, but progressing nonetheless, and it's being implemented, however gradually, and the straitjacket under which the industry used to operate is being slowly dismantled. And as a result, we view the sector as having changed dramatically over the past 3 years, and Pakistan, I would say, leads South Asia in terms of its competitiveness in sector reform. If we look at the energy and power policies, the government has prioritized the oil and gas sector as key for the country's continued development. In the past, Pakistan faced chronic energy shortages, and domestic energy demand has outstripped supply consistently. Privatization and reforms in the oil sector are progressing steadily, and deregulation of prices for petroleum products is being pursued in parallel with the privatization of Pakistan's state oil, which was mentioned earlier. However, power theft is still a significant problem in Pakistan, where in the past the government has assigned army units to look for illegal connections to transmission lines. The government's also recently identified the need to use renewable energy technologies, which we also view as promising, to improve the socioeconomic conditions of the peoples living in remote areas that have traditionally been off-grid. If we look at the production by source here, this has been repeated several times today, so we'll skip right past that and go on to consumption. Pakistan's energy consumption has nearly tripled in the past 20 years, and that is due in large part to its rapid development in the past 10 years. Demand for electricity will certainly go up in the long term, and that'll be attributed to substantial economic growth in manufacturing. Still, only 60% of the population has access to electricity. Some of the environmental conditions that exist, or issues, if you will, are unchecked use of hazardous chemicals, vehicle emissions, and industry activity caused by economic development. And one of its primary environmental health hazards is, of course, water pollution. Industrial waste and agricultural runoff have contaminated drinking water supplies in many areas of the country, and in the cities, air pollution, including lead and carbon emissions, is a major problem. Although if you've been to Islamabad, I encourage you all to go It's one of the greenest, if not the greenest cities in South Asia I've ever seen. So, why invest in Pakistan? We've heard a lot of reasons why American companies may not want to, or why they may be risk averse. But as an eternal optimist, let's talk about some reasons perhaps why they should give Pakistan another look. Well, the most obvious reason is that demand is now outstripping the supply of electricity. And whenever there's a demand for a service or a product, you have a little hole or a niche where you can break in depending on what your tolerance and threshold for risk are. In fact, by 2010, demand is expected to exceed supply by roughly 5,500 megawatts. Another reason, our friends at NEPRA have made considerable progress towards developing the future market design for the power sector. And yes, the pace of reform in South Asia is slow. It may not be as fast as we would like it to be, but again, I would maintain that Pakistan is progressing at a much more rapid rate than some of its neighbors. A long-term tariff of 25 years can be contracted with the power purchaser. IPPs are not generally subjected to the market risk for their output, and any additional taxation above the negotiated tariff can be passed on to the power purchaser. And we talked about currency risk, exchange risk earlier, and to account for this, tariff components can be indexed for variation in the rupee and USD exchange rates, which some companies may look favorably on before investing. Again, this is just a graphical representation of standard supply and demand curve, and we can see that by 2010, the gap widens significantly. So in putting together this presentation, I talked with John, and I agree with him 100%. You're not going to see a large group of big American IPPs coming back to Pakistan or India or Bangladesh anytime soon. So what market does exist? It's more on the smaller IPP side, the less risk-averse investor, the more adventurous investor, if you will, and we've got plenty of them at the U.S. Chamber of Commerce who have, how should we say, been taught on the gospel of the benefits of global trade and investment. We also have partners in Pakistan, the various chambers of commerce and industry who work with us in identifying some of the opportunities that I'll share with you. What we'll see in a second is some of the idle potential in Northwest Frontier Province and some of the solicited sites that are below 50 megawatts. Dar al Khawar, 35 megawatts. Samarga, 28. Ranolia, 12. Bat al Khawar, 8. Pehur, 18. And Tangsam, 25.5. And Gomalzam, 17.4. Not big. Certainly not something that may catch the eye of a company the size of our erstwhile friends at Enron, but certainly something that may catch the eye of a smaller investor. If we look at some of the opportunities that exist in Punjab province as well, again, not big ticket items, but certainly opportunities that our friends at the Board of Investment in Pakistan, as well as the various chambers of commerce and industry, would be happy to highlight further. So what are some of the procedures for investing for some of these solicited sites? Well, through the PPIB, we'll invite sponsors for registration, and the timetable that our friends on the ground estimate is roughly 60 days. And they do that through channels that are normally prescribed by the ADB and the World Bank. There's submission of pre-qualification documents, again 60 days. Evaluation of pre-qualification documents, 60 days. And then the government will invite bids for pre-qualified bidders, 40 days. 120 days allowed to submit your bids. Evaluation of bids, 90 days, including the tariff determination by NEPRA and notification of successful bidders, and then the posting of the performance guarantees by sponsors, which is roughly a US $5,000 per megawatt. Issuance of a letter of support, 30 days. If we add all that up, too many days. But there is a process that takes place, and again, compared to the rest of the region, it's on paper. It may not be executed perfectly every time, but again, when you compare Pakistan and the process for investing in solicited opportunities to, say, Bangladesh or certain states in India, I would have to say that overall they're at a slight competitive advantage. We talked a lot about coal earlier. Well, again, the bulk of Pakistan's indigenous coal resources lie in Sindh, with 175 billion tons of lignite in the Thar Desert. but a lot is yet to be investigated and developed for mining and power generation. In Balochistan and Punjab, coal has been mined since before independence, but as John and some of the other presenters mentioned, you have a security and political risk issue associated with Balochistan, although the quality is very good. And some small coal reserves are also located in the NWFP and Pakistan-controlled Kashmir. So again, going back to our friends in Pakistan on the ground, who are very good in sharing with us how to invest in power generation based on indigenous coal. In this case, a firm can contract with the provisional governments or authorities for development and availability of coal for proposed power plant. They can apply to the concerned provincial authorities or governments for a concession or grant. It's like the World Cup. I got my red card here, so I'm going to speed up. Again, this takes less time. I didn't put the days, but overall, small plants up to 50 megawatts capacity can be implemented at a one-window facility available at the provincial level. Again, the process is not perfect, but it's there. And I'll just end with this diagram here so that we can save time for the moderated panel and questions. And I don't have a concluding slide, but I'll end the same way that I began, and that is that it's not just India that is shining. Pakistan as well is open for business. It really just depends on what your threshold and tolerance for risk is. But overall, compared to the region, they are very competitive, and in certain sectors, and I would argue power, they have a slight leg up. So thank you again, Bob, for having me here, and I look forward to taking your questions.
Thank you, Mr. Zamgochian. I'm sure the Pakistanis here would be quite happy to give him honorary citizenship or something like that. Thank you for that strong endorsement. Very well said. Okay, great. I think we're doing quite well on time. Thank you to all the speakers here. They pretty much went by the timeline. And thank you all of you for staying awake and intent on hearing what was being said. We open it now to a question and answer session. And obviously it's open, but the subject, as you know, was the role of the private sector in the energy field. Yes, Mr. Milam would like to speak.
Do I need a mic?
Yes,
Yeah.
you will. We follow the same procedure. You get the mic and then raise the question.
Thanks. This is a question. I'm Bill Milam from the Wilson Center. I'll be chairing the next panel, so I thought I'd warm up. This is a question really for Mr. Umar, I think, who made a very, I thought, categorical statement about the fact, or at least his opinion, that it's almost impossible to get foreign direct investment in Balochistan given the security situation. But the question also goes to something that Javed Burki said this morning about this whole thing about the East-West divide, the resources being in the West and the use and the consumption being in the East for the most part. And I think he was saying something about the necessity to make sure that benefits are equalized somehow. But I want to ask about this is not an energy project. There's a recent project up in the Devil's Triangle of Balochistan for copper, which is a very large project, and recently attracted two of the world's largest copper extraction companies, one from Chile and one from where's it from? I forget.
Australia?
Australia,
BHP,
probably.
yeah.
Usually the Australians are involved in these things. And I don't know the details, all of the details, but they've got some sort of agreement with the local government, the Balochistan provincial government, I think the local people in the area, too. And I wonder if this doesn't, in a sense, contradict what Mr. Umar said, that there is a way to structure such projects, even given the local political, the current political and security situation so that you will get foreign investment. And I wonder whether Javed would comment on whether that project is a model for what could come in the future in energy and other projects in these areas.
I think it's a good thing you asked this question, so that will help me clarify this point. Not all of Balochistan is closed for business. In fact, large parts of Balochistan, I would say the majority of Balochistan, is actually open for business. Unfortunately, as it happens, the epicenter of where the gas is supposed to be is the area which is called the Mari Bukti area. And that's the most troubled part of the province, and that's where people are having difficulty going in. Otherwise, as you're probably very familiar with the fact that a significant port development project is taking place in Balochistan. The Gwadar port is coming in. The government has just in the recent budget announced incentives for industrial projects in there, and I'm reasonably confident that some of those will follow. It is also one of the potential sites being looked at for the coastal refinery. There is also an area close to Karachi in the eastern part of Balochistan, which is a significant industrial area. That's also the location for the largest independent power company in Pakistan. So it's not as if all of Balochistan is not available. It's just where the hub of the gas reserves are. That area is not accessible right now.
Thank you. That's a question from here. You want to respond to the first? Yes. First, Mr. Burki, and then you.
Bill, that's the question that you're asking. I think it is absolutely fundamental to the development of a comprehensive energy strategy in Pakistan. It is fundamental because of the way resources are distributed in the country. As I said, much of what we have talked about in terms of surpluses are on the west of Indus, consumption centers on the east of Indus. Not only that, Pakistan's other resource, water, which flows down the Indus River and other rivers, is tapped by the government and is given out at a highly subsidized rate to the farmers on the east side. So the government is not collecting rents in that particular case. In fact, it is subsidizing the consumer. It has had exactly the opposite approach on the western side, that it is collecting the rents, it is keeping it for itself, and a little bit of it goes out to Balochistan and to the frontier province as compensation for what the government has tapped in those areas. This is very inequitable. And my view is that a lot of the problem that the country has today is not essentially a security problem, it's an economic problem. And if the government of Pakistan was to sit down and negotiate a rent sharing arrangement with these places, then I think a lot of the tension that exists will just simply dissipate. And my view and my advice to the government would be that as you begin to develop a medium-term, even long-term energy development program, simply saying that we'll be able to meet the resource needs by inviting foreigners would not do. It would only happen if there is enough confidence on the part of the people who are living in those areas that they're going to benefit from the exploitation of this particular resource, that security will come around.
Thank you. To you, sir.
Thank you. Raghuveer Goyal, India Globe in Asia Today. I have two questions, if somebody can answer. One is that as far as this gas pipeline between India and Iran going through Pakistan is going through or not, or whether how much Pakistan is now interested, or if this is done deal. And second, as far as this, a lot of talk is going on about U.S., India, civilian nuclear power plants now in the U.S. Is there going to be any hurdle as far as India-U.S. India and Pakistan relations are concerned, or where Pakistan stands on this deal?
For the first question, I think, Mukhtar, you'd be the best person. He's been negotiating the India-Iran-Pakistan pipeline project. So,
as far as your, well, as I understand it, you want to know whether there is continued interest, right? There is certainly continued interest in Pakistan for the project, and my understanding is that India is also interested in this project happening. We are involved in active discussions with the suppliers, which is Iran, and we are hoping that in the coming few weeks or months we will be able to settle fundamental issues pertaining to this project. The requirement is huge, both in Pakistan and in India. So it's not that we're not looking for meeting luxury needs. I mean, these are essential needs that we're trying to satisfy through this pipeline.
okay.
Is that adequate, or?
Yeah, one more thing. But U.S. is against the deal. How India and Pakistan both will play this role?
Well, I was asked this question during the lunch break, and my response is fairly straightforward. The rationale for this project is very, very strong. The benefits of this project will accrue not only to these two countries or three countries, but they will also accrue to the region, right? And we are hopeful that at the end of the day, everybody will be able to see the benefits of implementing this project.
Thank you.
On the other projects.
Yes.
Thank you.
As far as the U.S. Agreement with India, which is still subject to ratification, I believe, no, Pakistan would have absolutely no issues with that at all. Why would Pakistan be against energy security of India or of economic development of India? However, as I had mentioned earlier in my speech, there is a reasonably strong argument in favor of a similar cooperation in Pakistan as well. You've seen the importance of energy. It's there for any country, but we've been talking about Pakistan today. We've seen the kind of potential bottleneck to economic growth that it can be. The most logical project for importing energy into the country right now is the Iran pipeline. This is my personal opinion. I think there is absolutely nothing else which compares to that. For global security reasons, the US is opposed to that project, at least at this point in time. And therefore, I think it is, apart from all other things, it is in the interest of the United States of America and the promotion of its global security policy to facilitate the development of nuclear energy in Pakistan. And I'll add to that what I said earlier. There's absolutely no reason why that needs to happen in the public sector. And in fact, in my opinion, it should be promoted through the private sector, which would take away perhaps some of the concerns, the security concerns, which might arise out of the development of a significant nuclear power generation capacity in Pakistan as well.
Thank you. You want to add?
Yeah, I want to address the last issue, nuclear power in the private sector. That will take place only if the government of Pakistan will take upon itself the insurance risk, as the U.S. government has taken upon itself the insurance risk for catastrophic failure, accident, whatever. And it's been a major issue within the United States. It just came up for renewal. It was renewed here. But a government has to take on the risk of a catastrophic event for a nuclear power plant. No one will touch that. It's also a problem right now in discussions with India. And they have the same desire to attract the private sector in. I mean, but if you're selling, even if you're selling a pressure vessel for a nuclear reactor, if you would then have to hold the risk for the security of that pressure vessel for 30 years or wherever its useful life is, you're in a position to bankrupt a company like General Electric. So General Electric will not sell you a pressure vessel unless the government will take on itself that risk of failure. I mean, this can be a shared risk, but that's what the U.S. government has done, and that has been a major, will be the major problem to private investment and ownership in nuclear power facilities overseas for U.S. companies and probably, I assume, for the Europeans as well.
Right, sir.
Thank you very much. I'll try to be very brief. it has always been there, the concept of east of Indus and west of Indus. But if we look at the maps of Pakistan, it's not just geological divide, it's also a political divide. If we look at the political divide, it's more than east and west, it's north and south. Also the resources in Indus, they are in Sindh area, they are more towards the eastern side rather than the west side, the map that you showed. Because all, east of Karachi, the third area.
Yeah, the
It's
Sindh,
not west of Indus.
Sindh, there is some big deposits which are near the
Yeah,
Indian
and
border,
that's
which
east
is on
of
the east
Indus,
side.
not
Yeah,
west of
that's
Indus.
right.
I
But
just
that's it was just like a broad categorization. I guess there will be exceptions. Yes.
Thank you. Akbar Khwaja. My questions focus on the inefficiencies of public enterprises. The question could be responded by Mukhtar Ahmed and Asad Umar both. Inefficiencies have been a major burden on Pakistan national budget, although there are subsidies of about 60 billion rupees that goes on the name of poverty reduction program, but basically these are managerial inefficiencies. My question to Mukhtar Ahmed, if he could reflect what is the progress on that, and second to the Asad Umar, after the privatization of Karachi Electric Supply Corporation, is there any improvement in the service delivery? Thank you.
Okay, they've been answering, let me take a shot at this question and they can add on to it. I'll first talk about your second point about whether there's been any improvement in the Karachi Electric Supply Corporation. As you know, the privatization happened, I'm not even sure if a year has gone by as yet. I think it's... sorry?
Less than that.
Yeah, it's less than a year. And there is an enormous amount of baggage because for some years, KESE was not investing in its infrastructure and the distribution system. Even the power generation system, the units were, had not been modernized. And we know all these units over a period of time do require fresh investments in their replacement, new instrumentation, and so on and so forth. So as a consequence of that, I think it would be very unrealistic to say that within that 1 year time frame or less than 1 year time frame we'd see a change. The short answer is we have not seen an improvement. Okay, so that's the short answer. But that should not surprise us, considering if you look at, as I tried to explain to you, its history and where it was and what the issues are. There's this whole question of bringing about a culture change. All of those aspects are going to take time. However, the new management, I really do feel sorry for them because they've been under an enormous amount of public pressure in the press and otherwise, and rightly so because people are suffering. There have been serious power outages that have occurred. But the game plan is there, and I think most of us would think, unless somebody has a differing view, that give them a couple of years and people will have to show some patience and forbearance, and I think KESE will get turned around. There has been this big issue about power theft and so on. I mean, that is obviously one crucial part that is to be addressed. The second one is investing in their transmission, in their distribution system. There's a tremendous backlog there. And there are opportunities to debottleneck their power generation area as well. So in all those fields, there is something that is going on. So that was your...
60 billion subsidy?
Yeah.
Managerial inefficiency.
Okay. Let me just say a little bit to you about the public sector. I've had the opportunity of being on a few public sector boards, and I would like to, in fact, sort of build that in, link it with the comments earlier Asad also made about the fact that Pakistan's private sector is coming into play, it's playing a bigger role, the fact that the government of Pakistan is privatizing, and so on and so forth. So, looking at some of the public sector boards that I worked on, I realized where the limitations were and where the issues were related to inefficiency, lack of decision making, and all those kinds of things. I think the one big thing that the government has done in the last few years is most of these public sector companies now have a board which in the past was made up purely of bureaucrats. Somebody is a joint secretary in some ministry and so on, people with that kind of background. But in the last few years, they have inducted people from the private sector, and they still have their own government people there. But there is a significant addition on the boards of people from the private sector. And the whole dynamics of the board, the interaction, etc., has changed considerably. And I think if you look at some of the annual reports, etc., that are coming out from these public sector utilities, if you look at them carefully and compare them with a few years ago, you will see significant amount of shifts and changes that are taking place. Numerically, I'm not sure if I can quote to you a number that what is the amount of losses that some of these units are incurring. But by and large, there has been a good turnaround, partly because of this change in approach, and partly because Pakistan's economy has done well in the last few years, and so that in itself generated, additional revenue-making opportunities. Okay.
Yes, just one point I would like to, because this is an important point you've raised, and we have not covered it earlier today. I'll just use the example of the power generation distribution system. The vast majority of the power generation system in Pakistan is old technology, it's simple cycle, it's 32 to 35% thermal efficiencies. State of the art is about 54-55% thermal efficiency. So there is about a 60% improvement in thermal efficiency that you can get using modern technology. Because the public system has not been delivering, so I mentioned the number of almost 2,000 megawatts of private capacity. These are all small turbines. These are all inefficient operations. In addition to that, the distribution system has losses which range from 23 to 24%. The technical losses, which should be there, are only about 3%, which means there's almost 20% additional loss there. In other words, you could increase Pakistan's power generation by almost 80% if you operated state-of-the-art technology today. So there is billions and billions and billions a year which can be saved by improving the efficiency of our power generation and distribution system.
All right, sir, we go there, and Bob, we'll come to you after that.
I think what we've heard this morning regarding cooperation between India and Pakistan on the Turkmenistan and then also the Dushanbe pipeline is very encouraging. I'm curious about the discussion that may have taken place between India and Pakistan and the Thar Desert, the coal development, and also the potential that Pakistan will increase its nuclear interests. I think this is, always has to be a two-way street, clearly, but I think given the prevailing winds and the pollution impact and so on and so forth, and knowing the propensity for the two countries to find fault with one another, I'm just curious whether or not the tar coal deposit development has been discussed with the Indians from a pollution perspective, because it's going to glow into the Thar Desert and into Rajasthan, and just curious as to whether or not this aspect of international cooperation has actually been discussed, either on the private level or on the public level.
Private level, I'm not sure if any dialogue has taken place, but Mukhtar, at the state, country-to-country level, has there been any discussion on the Thar? I don't. No.
May I recommend that you do that?
Yeah, I think like we heard on the Thar coal one, basically the whole dynamics of taking that forward is still is not happened. So whereas a lot of interaction has been taking place on the pipeline projects, lots of meeting, as you know, but I think it's a good point. But I'm sure, or not sure, I'm very hopeful that when we do get our hands around dealing with this Thar, which is overdue, we would be looking at bringing in new technologies. And I think the advisor also mentioned, like, whatever is available today in terms of technology of dealing with coal. And there's been, as I understand, significant enhancements and improvements in technology to deal with these matters from an environment pollution point of view. So I'm hoping that would be incorporated. But that's a hope. I really don't know factually where we stand. Yes, would you like to comment on that?
Thank you, Chairman. Just one information that I'd like to give for the investment in the region. Pakistan has recently signed the Energy Charter Treaty as an observer and will soon become a member by the end of this year. Now, this treaty provides a level playing field and a confidence to the investor for energy trade, for energy transit, and for energy investment. And I think this will be a very important demonstration of Pakistan's will to regard the investment, energy investment, and the same pattern as the national investment, and also to safeguard this investment for the future. And that is an important point that you may like to convey to your members, that we are now an observer in the Energy Charter Treaty.
Good. Thank you. Bob, you wanted to...
Actually, Zafar, I always am reluctant to give up the microphone. Nor do I want to keep us away from our last break, and we just have a few minutes.
Yeah.
I think perhaps you wanted to say some things, so I'm happy to give way to you.
Thank you. Just really just a few points. First of all, I would like to, of course, thank the panel here. I think very different aspects of the private sector opportunity were discussed. My colleague Asad, I think, gave a tremendous insight into what the private sector is doing, the pace of privatization in Pakistan. It is really very heartening, being a citizen of Pakistan, to see the kind of progress we've made on the privatization front. Obviously, we'd like to see more. Obviously, there is frustration that some things have still not happened, but we've had some very significant deals done in the recent past, and I think it sets the mode. There are also still, and I think this will probably continue forever, there is a strong ideological debate that still goes on in Pakistan, whether you should privatize or you should not privatize. And the newspapers are full of it. Right now, even our Supreme Court is seized with one privatization thing. Hopefully, in the next few days, they'll make a decision on that so we know where we stand. But there has been tremendous momentum, and as a citizen of Pakistan, and from my own experience, having worked on some of these public sector boards, I have absolutely no doubt that privatization is the way to go. It's just one hopes that the government does a better job of communicating with the populace of Pakistan about the rationale and so on. Because still many people in Pakistan, man on the street, doesn't quite understand why a profitable unit has to be privatized. You know, that issue remains. But good work, and private sector is keen. It's really quite willing to go on and take on bigger roles. I think the capacity of the private sector has also increased over a period of time to step in behind the public sector compared to, say, some decades ago when that capacity was non-existent. We heard Mr. Hammond, and it was a bit disconcerting because as it is, we have enough challenges, investing our sort of implementing major projects and so on. But it is a fact that if the developed economies are out there in the market looking for machines and equipment, then one, the price tag goes up, and secondly, the lead times to ordering that equipment. And I think our government and planners need to sort of be very cognizant of that. From my own industry and past experience, which was essentially in the fertilizer business, there were very significant swings that took place in the pricing of equipment and also the lead time. So I think we all know, this group would fully understand that timing of an investment is extremely crucial. Both Asad referred to the fact that if we had been out there in LNG, looking for LNG molecules a few years ago, we would have been ahead of the game. The same applies as far as equipment is concerned. So it really has to be all featured in. But whilst the US investors might be reluctant to come in because of the opportunities in the domestic market and their aversion to risk, there is, on the other hand, very, very clear indications that there are other groups that are interested in investing in Pakistan. And Asad referred to them, but like take our recent privatizations, the Pakistan Telecom privatization came in right from there. In the telecom sector, we've seen phenomenal investment coming in from the Arab world. And there is an interest there, and even the overseas Pakistanis, though perhaps not on that scale, are also interested. So there is an opportunity and exposure available there. As far as the Mr. Zamgochian's excellent talk was concerned, I said, we would like to make you a citizen of Pakistan. I mean, you gave a good endorsement to a lot of things that's happening. But on a more serious note, having been in Pakistan some number of years and worked a little bit in the region as well, I can also say very confidently that I think the policies that our government has vis-a-vis the rest of the region, they're at least as good, if not better, in many of the instances. So that is a tremendous opportunity. I mean, you know, all these years, if you take something like dividend, remittance of technical fee, etc., that you talked about, I used to have a chart that I used to show often at various conferences about, let's say, an investment in Pakistan which Exxon had made. And it sort of took the whole span of 35 years, in which, you know, over the years you show all the events that have happened in Pakistan, wars and atom bomb explosions and civil this thing and presidents going, falling from the air or being hung and all, you know, the whole drama of Pakistan. And on that is plotted the profitability and the dividend payout of the company. And it is really a phenomenal story. And so, yes, there are risks when you do business in a third world country, but then the rewards are also, they get compensated. So, you know, the rewards are also there significantly. But in all my years, I think what we have seen in the last 5-6 years in terms of the business, the economy, we can criticize a lot of things, the glass is half full or half empty, but I have frankly never seen it so good. I'm not saying that things cannot be better, but it's been a very pro-business, a very pro-economy kind of a drive that we've had from the government, be it the background of the people who run it now, it could be that, but we've got issues, particularly the political issues, you know, things that got talked about. In fact, in the provinces, the wealth distribution between them has been mentioned a few times. I think it's a serious issue. Wealth distribution generally is an issue, and those things need to be addressed. But I think private sector is up, it's strong, and I think the opportunities look good. So with that, I'd like to conclude. It's right on the button. Thank you very much, and enjoy your cup of coffee. Okay, sorry.
Thanks to all four of our terrific panelists, two of whom, as you know, have come all the way from Pakistan. I'm going to ask you to do something that I've never, ever, ever succeeded in getting anyone to do. I'd like to have a coffee break that actually lasts for 15 minutes. Bill Milam is going to be instructed to get the next panel started 15 minutes from now, so that we can get you out of here at a decent time at the end of the day. So, enjoy your break. I'll be inside.
First I didn't get it, I was like, now they've retreated because we're supposed to support it with technical knowledge and the president's drug office. He's got a drug. He's not on the panel. He's like he falls on this island. U.S. He's also he's a hero of international narcotics law. Because he was real supportive. Yeah. So I just came to one complaint from the those guys make the difference between history. Very subtle distinctions. Numbers don't write half the work. Compliment for the fact that there was working out there. Yeah, I try to go out. I know I have so much work to do, but I still go out. Unless I went out last night. I saw you were sure you was like, I'll do it later. Even though knowing that today I'm not going to work. We're something professional. You just need to be so much stuff to work with. Yeah. I'm like, yeah. I'll figure it out. Now that you put these two books, this is actually more pleasure. Yeah. Where's your see, it's not keep going past the zoo, like go like 8 blocks. Well, the next is a road. Metro, no, but the thing about it's right after the Blizzard water. You go Woodbridge yeah, it's pretty north. Yeah, it's north. It's in the north. I don't know what's going there. I'm saying is if you make the irrigation better, so is this actually lower cost? Israel's you know when we were there, you're right. The most northern side is the it's pretty crazy we're running across a big school of plastic. Do you have any contact with you and definitely cover the water I personally, I was at economic It's pretty funny when you see the interns coming out of the other buildings and you come out. It's hard to see the better person. Yeah. It's like a competition. No, I actually wanted this too. I was opening it, but I know what's going on. Right across the covering box.
We have several speakers mentioned the lack of investment trade in Pakistan a bit, yeah, exactly.
Nice.
That's entirely sure what I'm doing, but
yeah, I mean,
I'd love to integrate find ways to increase commerce.
My original plan was to
reduce tariffs, bring things trade, so that's something of a big projects. That's why it's not in the some of our discussions put it together and say what about things like that. Trying to increase regional trade. So
I didn't make it
we don't have a whole lot of trade. Get them to trade with their neighbors. Anyway, thanks.
was working in South Asia. I knew the corner.
Yes, I am.
We were trying to learn
Okay.
I don't know if I'll understand.